I would say disinflation. Because recession, yes, it's probably already here in Europe, and we are going to probably see a mild recession also in the US, but it's not going to be severe because we have a lot of safety nets, we have a lot of fiscal support, we have tight labor markets, we have easing bottlenecks. So all in all, we don't expect the recession will be really the keyword. I would rather bet more on disinflation because inflation is going to start 2023 still pretty high, above 10% in Europe and a bit lower than that in the US. But by the end of 23, in our forecast, we see Eurozone inflation down to around 2.5% and maybe down to around 3% in the US. So disinflation is probably going to be a key theme for next year.
So how close then are we to peak rates? I mean, if disinflation becomes the term we use, then surely we're reaching almost the peak of that. Does that mean we're reaching peak rates as well?
Well, peak rates in our forecast will be reached probably at the end of the first quarter next year. The Fed at 5%, ECB 2.75%, Bank of England 4%. Then I think we should be expecting some quarters of steady policy by major central banks. And then in 2024, where the progress of inflation will be more evident and we are going to see probably price stability met across the board, then we see the Fed starting to cut interest rates and fairly aggressively, maybe by 150 basis points in 2024. The ECB and the Bank of England will follow suit. And the ECB, for example, we expect 75 basis points of cuts in 2024.
Marco, I want to give you two data points. One from today with respect to Volkswagen. The automaker announced that their production in Changchun factory in China has been halted or disrupted due to the flare-up in coronavirus. Last week, we had a similar situation at Foxconn, which is Apple's major supplier. It seems to me that we had been talking about supply bottlenecks easing in the global supply chain. But with what is happening in China right now, isn't it fair to assume that some of these bottlenecks are going to start arising again?
Yeah, this is a fair question, and certainly it's a risk, right? But the issue here is that the global environment is different this time. We are very likely to see some disruption coming from the latest closure in China. But at the same time, demand for manufactured goods is not as strong as it used to be in previous episodes of Chinese lockdowns. So now we have clear evidence that goods inflation is on its way down. And this, to a large extent, reflects a fading demand, especially in the US, where consumption of goods were extremely strong during the pandemic. Right now, we have some payback for that. We also have some adjustment in some commodity prices. So to me, the latest disruption will obviously bring about some headwinds, but are probably unlikely to take us back where we were when we were discussing major supply side constraints. So the overall environment is a bit different this time, and I think that this is an important thing to keep in mind.